Even in these worst of times, the Bank of North Dakota is earning record profits and helping fund their state. It's been doing this for the last 90 years, hardly a radical startup idea. According to the bank's president, Eric Hardmeyer,
we are the depository for all state tax collections and fees. We plow those deposits back into the state in the form of low-interest loans. Over the last 10 to 12 years, we've turned back $1/3 of $1 billion just to general fund, to offset taxes or to aid in funding public sector needs. Not bad for a state with a population of 600,000. In 2009, the state of North Dakota does not have any funding issues at all. We, in fact, are dealing with the largest surplus we've ever had.
Interestingly, the Bank of North Dakota idea was initiated by a group of Swedish immigrants to North Dakota in the early 1900s. Community banking had been going on in Sweden for at least a century before that. Around 1820, the Swedes came up with the idea of the savings bank.
These full reserve banks only lent out money they actually had. They decentralized the money power and were encouraged by the government as a way for municipalities to fight poverty.
These operated on what was known as the church steeple principle, where the bank could only make loans to customers whose houses could be seen from the highest church steeple in town.
These community banks increased the commonwealth instead of the big bankers' wealth. This helped Sweden grow rich, which helped Stockholm
to grow into the magnificent Venice of Scandinavia that we see here today. But then the debt-based bankers attacked the savings banks.
They first convinced most of them to consolidate into bigger and bigger banks. Then the Swedish Parliament was convinced to pass a law allowing the non-profit savings banks to be bought up by the commercial banks. After a series of mergers, these banks are now called Swedbank.
They were under a severe attack during the 80s, but many of the saving banks still remain in the country. And they are very effective, and especially because they decentralize the power and give it back into the hands of the citizens. They empower the local communities. And in times of crisis, they have proven to be more profitable than the big banks.
Now there are only about 50 savings banks left, a small remnant of a great idea for publicly owned banking that shows that communities or even nations can operate debt-free.
Iceland's tiny economy and sparse resources were also nurtured by a series of public interest savings banks. Despite a population of a little over 300,000 people and a gross domestic product of around only $12 billion, Iceland is one of the most civilized nations on earth. But then the government privatized the savings banks, similar to the Swedish savings banks 20 years earlier. But in Iceland's case, even the Landsbanken, which essentially was the Bank of Iceland, was privatized as well. For the first few years, things looked good. The economy doubled. But under the surface, the private bankers were creating a huge financial bubble. They opened a new offshore internet bank called IceSave, targeting depositors in the UK and Holland by offering attractive interest rates for new depositors. Hundreds of thousands of new accounts were opened. Entire towns and police department pension funds put their money into IceSave, as did charities such as cancer relief funds. Using fractional reserve lending, IceSave fanned that into billions for questionable new loans. IceSave started investing in European ventures, especially in Russia. Many now believe that IceSave actually became a money laundering operation for the Russian mafia. All the while trading on the good reputation for solid banking Iceland had built up over the previous decades.
However, when the bank was privatized, it still used the good reputation of Iceland to grow huge and do, lots of criminal activities. And the owner, Björgólfur Thor, he became one of the rich boys in the world really quickly, one of the billionaires. I've seen documents linking him to the Russian mafia and his father. One oligarch that fled to the UK confirmed that Iceland was used as a money laundering machine for the Russian mafia.
When the crash came in 2008, the big Icelandic banks quickly failed.
In the 5 years' time they were privatized before the collapse, they actually grew 10 times the Icelandic GDP. And when it collapsed, you can imagine how huge the collapse was, because they collapsed onto the shoulders of the nation or the taxpayers.
The Icelandic parliament at first poured enormous amounts of taxpayer money into them to try to save them, but they still failed. Then the government bailed out all the Icelandic depositors, but the IceSave accounts were not in Iceland and were never insured by the Icelandic government, and so they were not bailed out. However, in the face of tremendous political pressure at home, the British and Dutch governments bailed out the IceSave accounts of their citizens, and then tried to make Iceland pay for it at terms that have decimated Iceland's fragile economy.
The income tax of more than half of the nation, just the interest of this particular loan. Then you have other loans, then you know we would have gotten from, in 2007, being the most developed nation in the world, into a nation spending all its GDP just paying interest of foreign loans.
Inflation shot up. Icelanders soon discovered that even the principal on their home mortgage loans was indexed to inflation. Many Icelanders saw the principal on their home mortgages double and their payments triple. This despite rising unemployment.
The way the loan system is in Iceland is completely outrageous. I mean, it is, your rights as a consumer are zero.
Foreclosures mounted and the citizens rioted. They call it their revolution. They stormed the Parliament Square. The president was forced to call for a referendum. 93% of the people voted not to bail out the bankers.
The Brits aren't exactly a shining light here about how to handle international relations.
It's one of the worst conducted, most absurd things I've seen in a long time, really. I mean, it's obvious that the Icelandics cannot afford to pay this money back. What we've just seen is the first anti-bailout tax revolt here.
Now the ruling party is trying to convince Iceland to join the European Union to be eligible for loans to save its economy. The people, however, seem unconvinced that more and more debt is the solution. Iceland now seems determined to take back their money power and not take on more national debt.
What I want to implement here is a healthy banking system where you don't have fractional reserve, you don't have high interest. The bank should not serve as mafia outlets. It should be something that is important for the communities.
Over 70% of Iceland now opposes joining the EU, and some are now supporting proposals for cities to start up savings banks based on the Bank of North Dakota model to provide local credit and stop the rising wave of housing foreclosures.
We're not part of EU yet. They are trying to put us in it with 70% of Icelanders don't want to join the EU, but the Social Democrats are in power, and that is their sole mission, to get Iceland into the EU.
Iceland is proud of its democratic heritage. Iceland is the home of the oldest parliament in Europe, having met annually for over 1,000 years. For the first 800 years, the Icelandic parliament met at this site, where the North American tectonic plate meets the European plate. Called Þingvellir, Icelanders consider this a holy site where elected government was born. Today, Iceland is the new battleground as it attempts to become the first nation in modern times to escape the serfdom of the debt money system. If Iceland escapes, the rest of the world will be watching.
If you end up paying this money, entering into the EU to try to find some